quick video showing how we got here in the first place. We're in a buying continuation. Where's this buying continuation starting from? This is the inverse head and shoulder pattern that even led us here back from April. Head, left shoulder, and higher right shoulder. Also little nested structure here. Little nested structure. But nonetheless, that's how we got up there, right? So inverse head and shoulder patterns, that leads to buying. I have the indicators here. We'll worry about that another time. 5-day and 20-day moving average. But as we can see here, you take a look, you can see, all right, we had that little test right there on that 513 or whatever, but you see how the 5-day moving average was trending up. We can start finding support off it, crossed up above the 20-day, and from there, it's kind of been smooth sailing. But you can't just say up or down buys or calls. Calls or puts. You know, it's not just that simple naturally, as you know. But let's take a look at this. Once it crossed over, when was the next time we retested that? Dang, man. Thursday, May 1st, all the way down to 23rd of May. See, that was really the second retest in May. You can identify a trend here. But on average, we retest the 20-day moving average about once a month on average, sometimes 2-3 times, just depending on what's going on here. Now, let's take a look at this. Last time we did retest it, September 25th, and now it's October, so we are certainly bound to retest 20-day moving average again. Once that happens, be mindful, you're in a buying continuation. Let's go ahead and get rid of that, like I said, on average, one time a month. Now, let's go ahead and cut down these time frames. Got to keep this video short. I'll try to keep it within 3 minutes. All right, this is 4-hour chart. Let's go down to 30-minute, which is it's pretty important. We can see here, we'll mark the selling first. Let's mark this selling. Right, so beginning of the day, 8:30. Strong precision. What the gucka? Oops. There we go. Right over here. I don't know what the heck is wrong with my chart. There we go. 673.93 to about right there. 672.18. About that spot. X marks the spot, baby. All right. Check it out. Slipped out of that buying continuation. That isn't anymore the case. It's not in the precision. Precision algorithms are your money makers. This is certainly your money makers. You always want to be taking profit in the precision algos. Now let's mark this point right here. 672.24 is important. So I will use the candlestick chart. Bam. We're just marking something close there. It's 26, but it's not too far off. Now check this out. Where did we reject off of within this liquidity? About right there. It was actually 86. But we can see how this is now a blue. You can make these whatever colors you want, but I would find a color scheme that works for you best when plotting algorithms. But you can see this is what we call a controlled selling algorithm. So this controlled selling, this can take a small dip, and we're expecting a dip maybe here, maybe at the 663. Why 663? We'll find out in a moment. Now, check this out. This can essentially act as a left shoulder in the future time, and we'll get above here. And we'll check it out. If things do go as foreseen and we do retest that 20-day moving average coming up right here, check this out. Indicator-wise, 20-day moving average is 664. 664 right now. So should be 665 around the time it's retested. I don't think it's going to get there today. Probably Friday. Now let's see what could happen if that did. We'd have here, come on up, maybe a slight rejection, and then we want to get past that blue algorithm, start trading above it. From there, you would see sustained buying again, continuing the bull trend. Now, I've been trading this for a while now, and I do have my fair share of struggles, but it's not in sense of analysis. It's in the sense of the timing of everything. See, the other day I was hedging up here, 672, what's this mark? 673 flat, right? So we knew 673 was a resistance mark. This is the equilibrium. Okay, now it was kind today. It opened up here, and we got a head. We got a solid head. This can possibly now be a head and shoulder pattern. I'm going to use the liquidity over here. All of this is pretty good liquidity. Oh yeah, in 5 minutes, I may not be able to send all of this, but I'll pause it right here, man. And we'll get into this later. But this is the main algorithm you need to worry about right now as well. Let me get to it. 6996, that's the low. 6999. 96 and 99. So check this out. What the heck, man? I keep going to the wrong thing. Pardon me. There we go. I'm using that to make it easier for you to understand. I'm messing myself up here, but check this out. 96 and 99. Finding the lows right here within this candle, this 30-minute time frame. 99. Jeez. Hey. Come on, baby. There we go. Here we go, baby. All right. Gonna make that the yellow algorithm. We're gonna get rid of this. Get some more clarity back in there for you. But as well, this is a support line. This is controlled buying though. There's like, precision algorithms are your money makers. Like this blue it's fair. It'll make you some money, but nothing. You want to see it in this type of movement right here. See this downtrend. This is beautiful. Like this was a real money maker right here. Like that's how sharp you want it to be. Like this the type of precision you want to make your money in. And again, we marking the lows. If you just made sense of it right here, and you would have exited right here, right? Say you entered in that resistance, right, forming that little head, and then you had your target right here. I mean, it's very, very clear. You even got an extra 50 cents or so, to help you out. But again, this is it's a bullish market. I actually got right here because I had recognized a familiar pattern. This is going to be magenta for me, but I recognized a familiar pattern. And last time we made these patterns, we did drop, but instead, what happened to us was because I entered in late. I didn't trade the morning session. I entered in late. I probably entered in somewhere. Well, I probably entered somewhere around here or something, man. But I even took a swing because I was short of it. But what happened to us? You see that we opened up higher. We opened up here, so this closed at 669.13. We opened up at 6 cents. That's a dollar average up, and from there, I was ready. I was ready for this type of movement today, but I screwed myself over by having a stop loss. I was losing money in this range. When it swung up in the morning, I lost money, and then over here the other day I traded this, hedging it. Because you can't just be like, oh, calls, oh, just puts, oh, I'm going long, just keep going long, keep going, because overall, sure, this trend overall is bullish, right? Overall, this trend is bullish, man. We see that. Like, we have support all the way down here at 663. We know this. But if it gets below 663, this is when you could see, outside of this algorithm here, this is when it could fall. We get here, then we could see some further movement down, And this aligns pretty good with a cup close, but we would have a closer cup close at the 655. Equilibrium once more, some more equilibrium right quick. Let's see, we kind of have it marked already. Yeah, we pretty much already have it marked, but you can clean it up a little bit. You see 613.09. And then right here, this isn't too bad, but this is another spot you can make as a target. But hey, in the meantime, this is bullish. There's going to be liquidity built in this algorithm. This is on the 1-day chart. Like I said, you zoom in, get a little more intimate with it. You can start to have more clarity, Now, anyway, man, got controlled buying algorithms, and you got some controlled selling in. You're looking for your precision, your orange precision, your blue. This is your controlled selling. You can form an inverse head and shoulder off of that. See, we can find support off of here. If it didn't want to drop, we would know it. If it wasn't gonna sell, we're gonna know it. You see, like we're gonna have to drop below 668 first. Like this is Friday. Let's mark Friday, right? When does Friday end? Right over here. So you know that if Friday we're still in this red algorithm, this magenta, now we just want to see rejection off of yellow. You know, because we're gonna have to get back into the blue. If we don't keep trending with this blue, this means this controlled selling has failed us, and we pick back up in the controlled buying. So this is just building more liquidity. You know, such as here, liquidity was built. Another moment here. This is liquidity. You got a little bit of liquidity down there, but you know, looking at those right shoulders, left shoulders. Again, this is like another liquidity range. We see this equilibrium here at 5.4 to 6.664. Bam, 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 bam. This is really great liquidity down here at this range, the 634, 640. Yeah, you see, it's just beautiful. 10-point ranges of liquidity, man. Anyway, I gotta end it.